just as low as 5,000 Kenyan shillings. What are these investments can you be able to do? And by the way, guess what? For the next 15 minutes or so, I'm going to share with you 7 investments that you can be able to do with as low as 5,000. Now, the excuses of, hey, Joseph, I don't have a lot of money. You can go ahead and do something right now as we speak. And by the way, you can either commit your 5,000 monthly and you can pick up any of the investments. And by the way, I'm going to make this video a very simple one. I'm going to divide these investments into two categories. And this is what I'm going to do, okay? The first category or the first set of these investments, I'm going to talk about the investments that are quite riskier. Are we together? Because remember one thing, you can either do what we call high risk or low risk. So the first, I'm going to discuss the high risk. Then I'm going to end with the sweet one of the basket. That is the less riskier ones that you can actually go ahead and pick them. The only thing that I need from you, by the way, if you're watching me for the first time, go ahead and hit that like button. Make sure that you subscribe. Why? Because I upload a video each and every day, and this is the basket of things that I talk about. And if money means something to you, then it's the place that you need to be at all the time. Smash that like button, comment on the comment section, tell me which one you are in, and was the video of importance. And by the way, where are you watching me from? Let's get to the business now. The first category, just like I promised, I'm going to talk about a little bit of moderate to high risk, okay? Moderate to high risk, okay? Moderate to high risk, okay? Now, here we are. The first investment that you can take or you can start with as little as 5,000 is what we call stocks. Stocks or shares, okay? We can call them stocks. You can call them shares. Depends on how you or which is your English or where do you borrow your English from, okay? The stocks, basically this is where you actually trade your money in the Nairobi Securities Exchange. You go grab yourself a CDS account, of which you need to have a stock broker. Once you get the stock broker, you can go ahead and commence on buying stocks from, 63 companies that you have in Kenya, stretching all the way from the likes of all our banks, all like in telco communications, like the Safaricom, the Bamboo Cement, the BAT, the Britam, and 63 of them. So you can actually get started on this. But anyway, the fact remains that with the 5,000, obviously, there are limited number of companies that you can buy shares from, okay? Because you cannot just go pick a company that has high, price per share, because that will cost you a little bit higher. But with 5,000, I rest assured you that you can buy stocks of over or close to 20 something or 25 companies in the Nairobi Securities Exchange. So with 5,000, guess what? You used to think like shares or the stocks are for wealthy? Oh, come on, you are wrong. 5,000, you can buy yourself over 20 companies on the Nairobi Securities Exchange as far as the stocks are concerned. So shares, well, may not really be that investment that I can tell you they have what we call the capital preservation, but at least it's a little bit of high risk, but also it means the high returns can also be realized. Stocks in Kenya, they usually pay, depends on the company that you buy. And again, there are stocks that are dividend, or there are some companies that they sell what we call the dividend shares. Others are not dividend shares. So if you go the dividend ones, some pay twice per year, that is semi-annually, or we call them the interim dividend, and then we have the end year dividends. Or option 2, you can actually buy for a company that actually pays one time per year, that is after the fiscal year. Did you get that? With only 5,000, you can get started. Let's go to the business or the investment number 2. The investment number 2 that you can actually get started as far as 5,000 is concerned. Okay, by the way, some guys are telling me, Joseph, you talk too fast. Okay, fine. Let me just slow down. The investment number 2 that you can take with as little as 5,000 is none other than something called equity fund, okay? Equity fund. Now, equity fund, again, the term equity here also means shares, okay? Now, there is a thin line between these two, because you'll be like, hey, Joseph, have you discussed the stocks? No, let me just draw a line. See, when you go directly to the Nairobi Securities Exchange and buy the shares by yourself, you're simply doing that because you have the understanding, you have the knowledge, you have the know-how. You know how you can analyze shares, you know how you can analyze those companies and what have you. You know what is a 52-week range. You can do what is an EPS. You know what is a price per share. You know all those, the percentage yield and what have you. You basically knowledge about the stocks or the shares. So you go directly by yourself. But if you do not know much about the shares and you would like to get yourself into, because sometimes I get calls and guys are asking me, Joseph, which company can I buy shares for? Which one should I invest? Honestly, by law, I'm not supposed to tell you that. That is the work of the stock broker. that is the one who's supposed to tell you you can buy this, because there is a certain form when you're opening the CDS account. There is a certain form called the email indemnity, whereby you go into a contract, an agreement between you and your stockbroker, that they can suggest to you some of the shares to sell, some of the stocks to buy, and such kind of a thing. But if you do not have the understanding, you can actually use, quote unquote, the back door, due to lack of a better term, and you can invest on this equity fund. Basically what happens is that these guys, or the fund manager, they usually collect that funds and then they invest on the equities. Equities, in another name, it means shares or stocks. So they are buying stocks for you. The first one, you make the decision by yourself. The second one, they help you because they are professionals. They understand this thing. They collect the money and then they buy stocks. And of course, when you're investing, you have to go and read the terms and condition. They always make it outright that your money that you're actually sending there to be invested on the equity funds, it is directed towards a moderate to high risk investment. But of course, they have done what we call the market analysis. Remember, these are asset managers and they are regulated. They are supposed to make sure that the people's money is safe and secured. Are we together up to that particular point? Those are two ways of how you can access the stocks. And then we can go to the third one. The third one, it's not that quite new, but it's picking up very well in Kenya. And this is what most of the people didn't know. By the way, there are two things that hasn't actually picked well market in Kenya, but they are there. One is index fund, though you may not need the same amount, but you also have what we call the rates. And that's what I'm going to discuss about here, okay? The rates simply means real estate investment trust. This is basically where companies whose major role is for construction, for real estate, what they do, they collect money from different individuals like me, you, and wherever they are. Once they get that pool of resources, they go invest. They can invest in D rates, they can invest in I rates and what have you. They build rentals, they rent them out. And once they get the money out of that returns, then they share that profit with the people. And that profit is actually called dividends. And they usually pay 2 times per year. In Kenya, we have a variety of companies that are registered and regulated about rates. If you'd like to learn more about rates, I do have a booklet. You can always pick that number of mine from the description of this specific video and you can get that copy, learn everything about the rates. Who are these companies? How do you get started? What are the requirements? And all those kind of things. How much do you need? But I can just throw a number. Rate you can start with as low as 5,000. You have yourself some, what do you call them? Sort of, let me call them shares because they're basically shares. You have some units here of that specific company that you can be able to go ahead and do what? And invest on these specific rates. By the way, it's like getting into the real estate with only 5,000. Yeah, I know Kenyans will say they sound like a story is a job, but it's a reality. Yeah, it's like getting yourself into the real estate with as little as 5,000. All right. So rates is another area that you can. And by the way, I always tell people this: if you can have that 5K that you can surrender each and every month and throw it out there continuously, and you're getting a certain percentage. Remember that video that I made and I told you guys, if you invest 5,000 continuously for a period of 10 years, getting a minimum return of 12 or 13% thereabout, you have yourself $1 million in 10 years. Can you imagine that? Therefore, that means that you can start as little or as low as this, and you can actually, propagate yourself to that level of investment and return. So don't despise that amount that you have out there. All right. So let's go to point number 4. The point number 4, or that investment, this is now the last, what should I say? The last and get examples of habit of high risk investments. Of course, you can get yourself into the business. Yeah. Businesses is normal businesses that we know. For example, I always ask this question. What if you get an individual who has the 5,000? In Kenya, we say they don't have mbele na nyuma. Simply means it's the only money that I have. I do not have a job. And I'm looking forward into catering for my bills like tomorrow morning. You get what I'm saying? So you cannot really advise this individual to go and buy these things or invest in these areas. This individual needs to do something that can actually do something. For example, you can tell the guy, hey, you know what? Just converge where the people converge in the markets, where they're selling things in wholesale. Grab yourself like a half bag of green vegetables, like the sukuma wiki, the spinach, the what have you, and show up to the estates, rearrange those, package them, and then you can sell them at the evening when people are showing up from the job and offer services like, chopping them and what have you. you have the business with you. Or maybe you can decide, show up to the market, buy the fruits in wholesale, get those fruits and vegetables and show up to that particular place, get yourself an umbrella or a place, just place them somewhere, and then you can tell people you are in business. Because if you start speaking the language of, let's say, okay, you know, there are two people here. We have an individual who can surrender 5,000 and it's not affecting their day-to-day activities. It's okay. That individual can throw their money towards the equity fund or whatever, all these things that I'm talking about. But here we have an individual who only have that 5,000, and this individual needs to cater for their kids or even need to cater for their own sustainabilities. At that particular point, then you'll be compelled to get yourself into the businesses, okay? Like, people call them the side hustles, but for me, I really don't like calling them side hustles, because it's no longer a side hustle if it's the only thing that you're doing. It's the main hustle. So you can go ahead and get yourself into these specific things. And 5,000 can get you a variety of things that you can sell. You can actually show up to some places where they are selling the second-hand clothes. Yeah, buy them. In Kenya, we call them the camera. You know, camera means like that cloth that, you know, it's a bit, yeah, it's a second-hand, but it's a bit pleasing and what have you. Come with them, you know, iron them at the evening. Once you iron them, package them, then open a TikTok account, sell them online, and then rent a shelf in the town, maybe for 1,500. Then if someone loves that thing, you can actually package in that shelf. You're actually renting it for 1,500, and then you can package there instead of going renting a whole house and what. Like, you can even get yourself an online business. All right, so that is a thing that you can get yourself into, and you can actually be able to cater for yourself and be able to earn that money because you need it as SAP. All right, now we are done. Those were actually what we say. These are a moderate to high risk engagement or investments with as little as 5,000. Now let's go to the next category, whereby now we talk about the capital preservation. What does it mean? Simply means that your money is secured, safe, and somewhere. You know, it's almost 100% that they're assuring you that your money is safe and secured. All right. Although I'm not trying to say that you have investment that are 100% assurity. That is not the language that we use when it comes to investments. We actually use the term, you know, what we call the affordable loss and what have you. So the first investment here that you can pick, I bet you've actually taken yourself a screenshot of all this, or maybe you're following me with a pen and paper, because I'm gonna go ahead and actually, you know, grab this. The second category, this is the best ones, yeah, in terms of if you're a risk averted individual. One, you can get yourself into something called balance fund. Okay, balance fund. Okay, balance fund. Balance fund. This is okay. Balance. The term balance, of course, we have to talk about two things. Like the way you talk about mutual. You cannot have a mutual relationship with yourself. You have a mutual relationship with someone else. So there are two parties here engaged. So when you talk about the balance funds, there are two things here. Remember, we talked about the equity, that is the shares, and something else. So on the balance fund, your money is actually divided into two categories again. What does it mean? A fraction of your money is actually thrown into a bit of a risky engagement. They can throw, maybe say, 30% to that money or 40% to that money towards equity or shares. And the other percentage is actually thrown into where we say there is capital preservation, or maybe they can also throw that money whereby it's actually in liquid form, just in case you need your money. So the balance fund gives you a concoction. It's like a portfolio on itself. It's like, you know, buying shares and getting to money market fund and getting to something else, like three things at the same time. So those three things or two things there in one basket is actually wrapped up in the media of a balance fund. So you can actually get yourself into this. And we have a variety of companies that offer this. Again, if you're interested on this balance fund, I have a booklet about that. I prepared all the information about it. It's an ebook. You can get a soft copy of it. Go ahead and grab that number of the description of this specific video. Shoot me a call. You can get your copy ASAP. Once you do this submission, it's only 280 shillings. Now, so balance fund is that investment that is actually gives you, or your money is exposed to two or three different areas. It can be thrown into the stocks, can be thrown into the bond, can be thrown into FDS, that's the fixed deposit, can be thrown to. So you have a concoction of different things. A little bit of that money is actually at a risk, you know, because they are actually prospecting, getting higher returns. Some other money is actually assuring you the capital preservation. Of course, also giving you some money out of that in terms of the return. And then some, you get what I'm saying? Now, that's what we call, it's a balance of different things at the same time. It's like a portfolio on its own. All right? Hope I made sense out of that. Okay? Now we go to the second one as far as the low risk investments are concerned, and this is where we talk about the bond fund. Okay, the bond fund. The bond fund, this is basically where your money is actually used to. By the way, you remember when I told you, when I made a video about the bills, the bonds, and what have you? Remember what I told you? I told you that you can get yourself into the bills and bonds using two routes. One, you can use what we call the primary market. That is when you go open yourself a DAO CSD account or on the CBK, and you get started, you do the bidding, you do the settlement, and there you are, you have yourself an investment. Okay, but that one, the disadvantage or the advantage is this. Let's start with the disadvantage first. The disadvantage is that you may need a little bit of high amount of money. For example, if you want to get yourself into the bills, you need a minimum of 100,000 Kenyan shilling. If you need to get yourself into the bond, you need a minimum of 50,000 Kenyan shillings. But that's not the language that we are speaking on this video. Remember, we are talking about 5,000, all right? So going the primary way, as much as may be the best because you're getting the whole interest by yourself, it may not be so appropriate for you because you do not have that money to surrender each and every month or even upfront, okay? Now, the other way you can get yourself into this bonds thing is the secondary market. Again, you may require the same money, but here you're getting it in the secondary market, but on a different version. What do I mean? We all know bonds you need 50,000, bills you need 100,000, but with as low as 5,000, you can actually get access to that market of bonds using what we call the bond fund offered by these asset management companies, you know. I don't want to mention any company anyway because I'm not an affiliate of any company, all right? So that means that you can throw your 5,000. So you already know at the back of your head, that 5,000 that I've thrown into that given company for the investment purposes, that money has actually been channeled towards the bond acquisition, the bond investment. So you already know, I'm into the bond, though I know bond requires 50,000, but I'm using a different route using this asset management company that my 5,000 has actually been thrown into that bond fund. And this one for sure, bonds and bills are regarded as low risk investments where capital preservation is assured. So therefore, the bond fund is actually regarded as the same. But bond fund, some other companies may call it a different name, but that's a story for another day. But it is what it is. That is basically what it means. And then if you go for the last one, that is the MMF. MMF is that investment tool that I've been talking a bit about it like a million times. I have like several videos that I've dedicated talking about MMF. This is that amazing tool that you can use for the purposes of what we call, you know, emergency fund. Basically, this is money that you set aside just in case of any, you know, what do you call it? Happening or something of sort. So this MMF does not only gives you the accessibility of your money at any given time, but also gives you the returns out of the money that you've invested with them. So therefore, this makes it one of the best tools that you can use as far as the investments are concerned. Why? Because it's not only, you know, doesn't require like a huge chunk of cash. With some money market fund with as little as 100 bob, 1,000, 2,000, 3,000, 5,000, you can get started on. So by the way, I've never seen a money market fund that you, unless one company of which I wouldn't mention the name, that you require a little bit of upfront amount of money for you to get started on. So the money market fund, obviously, I don't want to dwell much about it. You guys know what it is. Probably you already have one. And yeah, you can go ahead and do something about it. So those are basically two classifications as far as the investments are concerned that you can be able to take. But the question is this: which one is more appropriate for you? This one I will tell you. Basically, go back and figure out what is your target. We invest based on our targets. What am I prospecting to get? What are my goal? What is the aim? What is the purpose of me getting into this? What do I need when? So when you answer all those questions, now you can pick. Okay, just like an example I was giving when I was talking about the business part. You know, that's an individual who is aiming at getting the food like tomorrow, paying their bills like tomorrow. You know, you are there, you're looking at it from a point of, this is my emergency fund. MMF will be appropriate for you. I'm looking at it from the long-term investments. You can look at, and you actually, it's not a money, it's a money that you say, hey, you know what, I don't have a problem with it. I can actually risk it. You can go the equities, you can go with the, you know, rates, you can go with things we call the stocks and what have you. So basically, go ahead, take a pen and paper, sit down, try to analyze. Even if it means you calling your financial advisor on board so that they can actually, you know, professionally offer you that guided, you know, investment. Because at all the time, whenever you're investing, please don't behave as if it's an emergency. Number two, don't invest just because everyone is investing out there. Please be informed, understand what you're getting yourself into. Why is it this so? And those kind of things. So when you make that informed decision and you throw your money into that investment, then you can actually get the result. Please, if you rush and get into a thing and you do not even understand what it is, you're likely to actually regret out of that. Because remember one thing, yeah, Back then when we were young, we used to be taught all about savings. Here we talk about savings, yes, and at the same time we talk about investment, because both of them are essential, important, and needed. That's what you're supposed to understand. This is Good Joseph. If you're watching me for the first time, don't forget to make sure that you subscribe to YouTube channel. Why? Because I upload a video each and every day, and I don't want you to miss any piece of my uploads. And don't forget to, as well, in the comment section, tell me where you're watching me from, and what do you have out of all the seven that I've discussed. Which one do you have? And by the way, just like an iron sharpens another iron, so do we learn from each other. For now, it's a goodbye and see you in the next one.